In a new letter to Chevron, he's calling on the oil giant to boost production and slow spending on its energy transition plan. All right, Vivek, let's talk about this. This is more than your average shareholder push to change things. You've got a message that you're trying to get out. I think you're kind of taking a page after what we saw happen with Exxon last year with the proxy battle that was done there by engine company number one. You're kind of taking the opposite page of that. Explain what motivated this.
So look, I actually see here in Chevron a company that has exhibited unusual courage in standing up to external demands and a CEO that actually has his head on his shoulders. I sent a letter to the board, though, questioning certain of its behaviors in response to other ESG promoting asset managers. One of the great examples that I pointed to in the letter was the fact that Chevron in 2021, over the board's objection, ended up being pressured into adopting a shareholder resolution, gaining majority support for a Scope 3 emissions proposal. And the basic question I ask is, why is a Scope 3 emissions reduction proposal in the best interests of Chevron as a business? And I will tell you, I do not believe there is a good answer to that question, because this is a proposal that calls not just for the company to reduce its own emissions, its own usage of power and gas, but also every unit of emissions all the way down its supply chain, even to that used by its customers. It would be approximately equivalent to the business logic of McDonald's voluntarily committing to reduce the adult body weight of anyone who's eaten a Big Mac without asking a consumer to share in that responsibility in return. This makes no business sense for Chevron. But the good news is, I hope that a new voice, a new what I call post-ESG voice, can actually drive behavior in the other direction to go back to creating value for shareholders exclusively over any other social or cultural or political objective.
Hey, Vivek, I hear your concerns. I think it's one that a lot of us have kind of looked at and thought maybe this ESG movement has gotten way too political and is pushing companies to do things that don't make sense. But what you're doing, I think, as a corporate gadfly, might make things a little more complicated for Chevron, too. You say that you're trying to make things easier for them, but by highlighting this and getting people and critics to come focus on them as a result, I don't know that that necessarily helps. I think you're right in that Mike Wirth has tried to walk a pretty fine line, making sure that he is doing what's best for the company. But that doesn't always include just bottom line issues. You got to look at all the factors and things that are going into it.
Well, here's what I'll say. I mean, Mike wrote me a gracious response last night. I'm looking forward to continuing to engage with the company. But at the end of the day, this is about bringing a different voice to the table, because a lot of these ESG claims have not been contested in the open. Firms like BlackRock and State Street and Vanguard, all of whom voted in favor of that Scope 3 proposal in 2021 at Chevron, by the way, have not had their claims contested in the open, claiming that this is about long-run shareholder value, claiming that this is about preparing for an energy transition. I think that those tautologies, though, have been used as vehicles to advance agendas whose primary motivations were not at all oriented towards maximizing shareholder value in the end, even though they're disguised in that language. So that's my perspective. But I think any company, I hope Chevron included, is going to be better off from actually bringing these debates into the boardroom rather than unquestioningly accepting the claims of shareholders at one end of its spectrum. And one of the things that's interesting is even the group that proposed this actually Scope 3 measure, for example, at Chevron, was a Dutch nonprofit that was open, that it had no business goal, that it was just about advancing climate change. And the irony is that even BlackRock and State Street questioned their own judgments in 2022 when they said they didn't vote in favor of a new Scope 3 proposal that year. The dialogue's gotten a lot mixed up. At the end of the day, a lot of these firms are vacillating, boardrooms are vacillating, because there's no clarity of debate about whether or not these measures are actually in the best interests of the company and its shareholders. That's the debate I want to start.